Good afternoon. It is Tuesday, January 30th, 2:50 p.m. Markets have a little more than an hour to close. Wanted to get this video out. I said a few videos back that it looked like we were, I felt anyway, at an inflection point. And I believe since I made that comment, it has only gotten more confirmed with what's going on in these markets. So I think we need to focus and not get distracted with all this kabuki theater. So I think this is what we need to really focus on. The dollar, interest rates, 10-year, the VIX, and gold 1340. So let's start with the dollar. This is a 5-year chart of the dollar, and it looks terrible. Okay, it's breaking down. Mnuchin says he wants a lower dollar, then he says he wants a stronger dollar. Okay, just not now. Okay, Trump says we're for a stronger dollar, okay, but I wanted a weaker dollar, so we don't know who to believe. So let's believe the price, okay? Let's believe the action, okay? Not what they say, but what they do. So this is the 5-year. It's 89.21, all right? Now, at the time of this printing, it was down a penny, okay? Now, again, this is the 5-year weekly. Now, it's a little oversold, to be honest, okay? It's got an RSI at 28, all right? Under 30, oversold. Over 70, overbought. So, is it due for a little respite? Yes. I don't think that changes the trajectory, though, okay? Which is clearly down, in spite of what they say. So, we have to watch this. So right now it's at 89.21. It's had an 88 handle before, okay? It's coming up against a little support right there, but clearly it looks terrible. Is it oversold? Yeah, a little oversold, all right? Can it have a little bounce here? Yes, but I think the trend is clearly down. Weaker dollar. Let's talk about rates next. Now, the 10-year is 2.73 at the time of this writing, okay? Rates are clearly going up, all right? Once again, the trajectory seems to be up. Okay, this is the yield curve. All right, now you can see the 10-year 2.73, the 30-year 2.99. Okay, so the long end of the curve is rising. They're at key levels that some of the the whales, Bill Gross, Jeff Gundlach, have said these are critical levels. We're in a bear market. Others disagree. But the trend, we have to focus on the trend, not these daily fluctuations, because nothing's going to go straight up or straight down. All right? Let's focus on the trend. Now, the difference between 10s and 30s is basically 1/4 point. So who's going to tie up their money for 20 more years to get 1/4 point? Does that make any sense to anyone? All the risk that you have to take on, all the inflation risks, okay, that you have to take on, all the time, opportunity cost for 1/4 point, does this seem rational to any thinking person? The spread on the 5s and 30s 2.48, basically a half a point more for 25 years. This bond market is completely distorted as far as I'm concerned. Okay? So we have to watch these lines. Okay? So that's the yield curve. Now, this is the 30-year, right? It's a yearly chart. Okay? The 30-year has decidedly, look at that spike. Let me show you that spike up right there. 2.99. All right? And it also is starting to, with that spike, it is taking out some prior peaks. All right? So we have to watch this 30-year. All right? That horizontal line. Right now, it's butting up against some zones of tradability right there. Right there it was support, right there it was resistance. So we're at a key level with the 30-year. But again, the trend, if you look at that spike up, is clearly up. Okay, and now here's the 10-year. Now at the time of this printing it was 2.73. And once again, this thing has really moved. The trend is clearly up. Okay? And we're looking at 3. We're looking at 3 on the 10-year. All right? So we have to watch the dollar. We have to watch these rates. Okay? And I'm sure everybody is. Okay? The next thing I want to talk about is the VIX. Now, this was a screenshot from yesterday that I didn't get to because I was, quite frankly, in no mood. My frame of mind was after these 6, I don't want to call them traders, okay? They're not traders. They're criminals, okay? I guess could be, let me not go there, okay? But anyway, I wanted to talk about this VIX yesterday. We have to keep things in perspective because historically, okay, people still have no fear out there at all. All right? But this was yesterday, and I wanted to talk about this yesterday. The VIX yesterday was up 16%. Okay? 1291. All right? Up 16.5%. And look how the VIX also had spiked, okay? And it butted its head up against. Look at the spike in the VIX, all right? Now, again, historically speaking, all right, this is nothing. But nevertheless, they're starting to have some volatility come back into these markets, all right? Now, here's the VIX, January 1990 to present. So you see, okay, there's still no fear here at all. No, look where we are. All right? Look where we are. We're in the gutter, which is extraordinary. It's really extraordinary to me. The extreme level of complacency right now, which in my mind tells me that if these things were to reverse, we could have extraordinary circumstances. Now, the VIX today is up another 5.5%, 14.6 on the VIX. So we have to watch the VIX. I'm not going to get sidetracked. I'm going to focus on the dollar. I'm going to focus on these yields. I'm going to focus on the VIX. Okay? And I'm going to focus on 1340. All right? And that 1340 level, it's like a magnet, that level. Now, gold had broken out convincingly last Wednesday, I believe it was. I wanted to see gold hold, test 1340 for 3 consecutive days. We didn't do it. We didn't. It held on Thursday. It held on Friday. I said, I'm going to watch these markets on Sunday night. It's going to be interesting. I watched them, okay? And sure enough, Sunday going into Monday, they took it down under that 1340. And it was a battle, a clear battle. There's no doubt about that. So I was taking screenshots of the skirmish. Okay, now I have some screenshot. This was actually, let's go back to Thursday, because this is when gold was 1340, we call it 1347, 1348, right? They had banged it down $10, but it held, right? $13.47, right? Bid, $13.48 ask, right? Then this was the 29th, which was yesterday. This was 8:04 New York time, right? It was up to that. It was that 13.48 level, came under pressure, and then boom, they hit it. But they didn't quite take it beyond 13.40. It actually, when it hit 13.40, it had a little bump up. It was down $6.70. 8:04 a.m. New York time. So I thought, okay, maybe we got a shot here. 8:04 New York time. 13.42 bid, 13.43 ask, down 670. Then that little bump up, right? Got it up to about 13.44. Then it started to come back down again. 10:51 New York time. These are all things I was going to point in yesterday's video, if we ever got around to it, but we didn't. So I tabled it for today. So now it's down 781. And it's still holding that 1340 level, right? But they're fighting this, boy. You could see. You could see gold wants to go up. It looks like it wants to go up. The price action leading up to last week looked like it wanted to take it out. And it did. So that was at 10:51. 13 minutes later, they continue to hit it down. Now it's at 13.40.50, down 880, right? 13.40.50, down 880. Then they brought it under. Now that was at 11:04. 5 minutes later, they were able to take it down. 13.38.80. 11:09 New York time, down 10.50. All right. This is what they wanted to do, people. They'll defend this to the bitter end. Okay, this level right here, 13.38.80, and an ask of 13.39.80. So even though it didn't hold 3 consecutive days, and I said that's my key, and there's a lot of other people that disagreed. They said, oh, we're going to 1400, it's a hop, skip, and a jump. Okay, what could I tell you? Maybe you know something I don't know. All right? Now, has this shaken my confidence? No, we'll just reset it again. We'll reset it again, because it looks like it's going to happen. Okay? It didn't happen this time. All right? What did Sherman say to Grant, right? We got the devil's day of it today. That's okay. We'll lick them tomorrow, and that's how I feel, all right? Because you can see it. You can get a sense of the price action, right? And then, interesting enough, at 12:05, started to make a little comeback, all right? $13.40. Came back a little more, tried to take it back, okay? And then today, when I woke up today, it had been moving up, still down $1.60. Actually, this was 4 o'clock in the morning, 4:26 a.m. New York time. I snapped this picture. You could see there, 4:26 New York time. I was watching the gold price through the night. Okay, going down, but then it reversed. It reversed, looked like it was going to try to get to that 1340, right? But they held it. They held it down. And then, basically 5 hours later, a little less than 5 hours later, gold looked very nice. 1347, looking good, up $7.20. I saw that. Now, why did it go up? Why did it go up? This is 9/18 New York time. Now the futures, the stock market futures were down considerably, okay? But rates were up also. So this nonsense about how these rising rates are negative for gold, it's just not true. It's not true, okay? Because they're going to spin that these rising rates are a reflection of a stronger dollar, right? It's just the opposite. As the dollar is weakening, people are demanding more interest to hold the dollar. It's just that simple. This is inflationary, clearly, all right? You'll hear otherwise, okay, from these shills and cheerleaders on CNBC, okay? But the overwhelming evidence, the fact is these rates that are going up, it's inflationary, it's a weaker dollar, and it's good for gold, okay? But then what they did, now it's 13:47:10 at 9:18 a.m. By 11:15 a.m., basically 2 hours later, they knocked it back down again to that 1340. Boom, they hit it. So here's the battle. It's playing out right before our eyes. I have it captured right here. It's very interesting. And that was the last picture I took. So I know it was a lot of photos, but I think it's important. You see the price action. You see the push and the pull. So if we look at the charts, this is the 1 year. So what am I getting at? Where is gold going once we settle this 1340 business once and for all, right? This is the 1 year, right? Now, it was overbought. It was overbought at one point. So this pullback, it had hit 1365 just last week, right? It was overbought. It's not overbought anymore, okay? The RSI 60.18, okay? Now again, this is a yearly chart. Now, interesting enough, I want to see if we could hold. It busted out. That was the big breakup to about 1366, right, last week. It's come back down, okay? And it looks like it wants to hold. They are not able to really take it down too much below this 1340. They've been able to cap it, but they haven't been able to break it. There's this tug of war right here. So I want to see if this can hold now. All right, so I'm looking at this. Now, the next thing I want to look at is the monthly. This is the monthly. It's going all the way back to like 1985, December of 84. All right, and what I want to show you, it was so flatline basically for all those years, and then it had that big move, right? Now, I've mentioned this before, and I still think this is in play. To me, it has not been violated. That's this inverse head and shoulder pattern, right? Now, we saw it clearly in 08, right? That's here, this inverse head and shoulder pattern, right? You got the shoulder, you got the head, you got the neck, shoulder, right? And then it took off. Now, I believe we are in a massive reverse head and shoulder pattern. Am I playing fast and loose with the charts? Oh, maybe. But I think this is a valid pattern right here. You have the, I guess you'd say, the left shoulder, right? That was the high, 1900, bouncing around between 1800 and 1600. Then you have this huge base of a head that's forming. You can see that. It's taking a long time to play out, right? So could we bounce a little a few more times and complete this base? Yes, we could. I don't have a problem with that. All right. And then we have if, and it's an if, if it continues to form and complete this base, then we could continue to go up to this 1800 level and complete the right shoulder. Am I ahead of myself? Maybe, but I certainly think nothing has violated this long pattern. Okay? Now, what I was hoping for, it didn't happen. These are the monthly numbers. Okay? I know it's a little small. I'm trying to cram a lot of data on one sheet. But these are the monthly closes. And I went back to January 11. 1334, 1409, 1439, 1556, 15, so on, so on. This is all 2011. Then we get into 2012. Now, when we got to September and October of 2012, that's when I believe the bear market had started. The September, October 2012 start of bear market. Because that's when we started to get lower lows. Okay, from September it was 1773 close, monthly close. October 1719 monthly close. Then November 1712, December 1675, January 2013, 1662, and down and down and down and down and down it went. Okay, so now we've been flirting with this 1340. Tomorrow, and I've been watching it the last couple of days. Tomorrow is the last day of January. All right? And I was looking at this July 2016. Because that's the highest close we had since what we're in now, 1349. And we were there. We were there yesterday when I was taking these pictures, basically, right? Or the day before and this morning, right? So I thought maybe we had a shot to take out this monthly high. All right, we got one more day to do it. Is it possible? It's possible. It's possible. But that's what I was looking for, right? So, because look at what we had since that July 16, 1349, 1311, 1317, 1273, 1170, 1151, 1211, 1251, 1247, all in the 1200s here. In August, we had 1322. Then we had another 12, 12, 12. 1309 in December, right? And I have a question mark. Tomorrow we'll know. Okay? I would have liked to have seen it take out July 2016, 1349. But that's okay. All right? So I wanted to zoom in a little more on the right side of this chart. This right side of this chart with the head and shoulder pattern. So I'm zooming in a little more, right? And I believe that's the left shoulder. This is this long base that's forming, okay? And that's the potential, the dashed lines, to go up, complete the right shoulder, and take off. Is it possible? I believe it. I believe it certainly is possible, all right? So, I know this video is very long. I got a stack of papers I haven't even gotten to. Maybe I'll just, I'll say it quickly, okay? I'll sum it up this way. Housing prices, okay, are surging. All right, the Case-Shiller Index, we're basically at a record again, going all the way back to 2006. Incomes are flat. People are tapped out. Savings are pretty much in the gutter. Credit cards are maxed out. Okay. Mortgage rates are going up. So this has all the makings of, we've seen this before. We've seen this all before. So you got house prices going bonkers here. Seattle, 12.7% increase. San Francisco, 9%. Las Vegas, 10%. Atlanta, 5.2%. Boston, 6.3%. Charlotte, 5.8%. The S&P Case-Shiller 20-City Index rose a seasonally adjusted 0.7% in the 3-month period ending in November compared to the same period ending in October, and was up 6.4% compared to a year before. So on average, I said to my wife the other day, we've seen this act before. People, we don't have to work. We're just going to get rich on our houses. No, it's not going to happen that way. It never does. Okay? So, house prices are surging. Wages are flat. According to the latest BLS data, average hourly wages for all U.S. workers in November rose at a stubbornly low 2.5% relative to the previous year. Okay, well below the Fed's target of 3.5 to 4.5. So I'm just going quickly here. Okay? Because a quick look at U.S. housing shows that while wages may be growing at roughly 2.5%, according to the latest Case-Shiller data, every single metro area in the U.S. saw home prices grow at a higher pace, while 16 of 20 major U.S. cities experienced home price growth at 5% or higher, double the average wage growth. Okay? Wages are not keeping up with the price of houses, right? And it goes back, it reminds me of that Big Short again. Exactly what I just read to you actually happened with the last real estate bubble, right? The big investor, right? He comes running into Dr. Michael Burry's office, right? Michael Burry, he's put on the Big Short. He's just waiting for the market to collapse, you know? And that's another thing I said. The money isn't made in the buying. The money isn't made in the selling. The money is made in the waiting, right? Charlie Munger said that, right? So he's just sitting in his office reading a book, you know, and this guy Lawrence Fields and somebody else comes rushing into his office, right? And I wrote it down, Lawrence Fields. And I said this to you once before. We have no confidence in your ability to identify macroeconomic trends. Dr. Michael Burry says, you flew here to tell me that? Why? Anyone can see there's a real estate bubble. Lawrence Fields. Actually, no. Well, no one can see a bubble. That's what makes it a bubble. Dr. Michael Burry. That's dumb, Lawrence. There's always markers. Mortgage fraud has quintupled since 2000. The average take-home pay is flat, just like now. But home prices are soaring, just like now. That means the homes are debt, not assets. And that's what it is. It's 2006 all over again. So that's about it, people. Consumer confidence also basically at all-time highs. So we need to watch. We need to wait. So getting back to this, where we are in gold. Where are you? I think that's the real question. Are you waiting? Are you waiting for a pullback? Do you have any exposure to gold? What's your time frame? What's your risk tolerance? Only you can answer these questions. Are you afraid to get in now? It's too high? Do you want to wait? I don't know the answers to this. I think you need to sit down, think about it, and plan accordingly. But again, this is what I'm focusing on. Dollar, rates, VIX, 1340. Because when the VIX go, that will show what's going to happen in these markets as well. So this is it, people. Thanks for listening. I know it's been long. Beautiful day out there today. If you can get out, take a walk, take a good long walk. I was out early. I'm going to try to get out again. Just clear my head. Let's see how these markets close. We've got 45 minutes left. And tonight is President Trump's first State of the Union address, which ought to be interesting. I want to see if he talks about this infrastructure, another $1 trillion, right? So have a good night, people. Lord willing, we pick it up tomorrow. Ciao.